Good morning, ladies and gentlemen. How's everyone doing today? Happy Friday. Guys, before you find yourselves grief-stricken because I'm here and not John Novak, he got corona. So we're making him rest today. He's still catching his wind. Good morning, everybody. It's good to see you. Safia, Walter, Christina. So guys, we're going to do what we do today. We're going to talk a lot about advantages. We're going to talk about rules being met. Guys, I'm really counting on you guys for some great participation today. Look at how that crude oil market is moving. Woo, go crude oil. Guys, each and every morning before I get anything going, I like to check my news. Good morning, Mohammed. Bobby T, good to see you. Claire, all good on YouTube, I hope. Hopefully I'm not confusing you this morning. I slept in today, guys. I'm pulling my day late and $1 short card. Uh-oh. There we go. Forgot to pop out the room here. Every morning, guys, I am going to forexfactory.com. I want to see what's happening in the wonderful world of news and make sure that I'm not trading in front of something that can be a little crazy, a little silly, something that'll make that market bounce around. Today at 9:45 a.m., we have what's considered low impact news, the final services PMI. But at 10 a.m., you'll notice the red box, guys. This is what we call high impact news. And high impact news has the potential to make the market jump, bounce, move crazy, and really kind of put you in a position where it's almost untradeable. It moves so fast. So be aware of the news, guys. I'm not saying that you have to know what an ISM services is. Just be aware that it's coming out and it may move that market kind of crazy. And that's the beginning of my routine, guys, every day. Good morning, Zeba. Nice to see you this morning. And guys, then I like to take you over to the education page, right? What's going on the education page? Well, everything that I talk about, and guys, I mean everything. There really are no secrets in Nexgen. We don't necessarily hold back from you. What we do is we try to give you everything that you could possibly have to become comfortable with the software. And this class is designed, good morning, Cal. This class is designed around a foundational approach, guys. My goal for you in this classroom, if you're brand new, my goal for you in this classroom, if you're in your first couple weeks, is we're going to just start stacking building blocks. We're going to do one thing at a time. We're going to do it well, and we're going to move on to the next one. And we are going to take this journey together in pursuit of what we call a high probability trend trade. And this is going to be the first thing that you guys are really going to look at and focus on. And believe me, there's a method to my madness, guys, because a high probability trade is defined when each indicator on every chart agrees with the rules for the trade. And typically, this is when all triggers are their strongest, no termination conditions exist, and there are no trouble spots between your entry and your target. Oh, is that it? Thank you, Claire. Oh, today is March 3rd, isn't it? That was my bad. Today is your happy birthday? Happy birthday. I didn't want you to have to share your birthday with a YouTube broadcast because your birthday is more important than YouTube. So I labeled 2 March 2nds to give you your own day, Claire. Happy birthday to you. Oh, finally. 25, your car insurance goes down. Good stuff. Crude's ripping around right now. Yeah, I saw it right before we came in. Guys, I want you to focus on high probability trend trades. We're building a foundation. In the spirit of high probability trend trades, guys, I really want you to let it be simple, okay? I want you to keep it simple. I want you to remember that you're new. And I want you to remember that everything that you do, guys, and this is in chronological order, rules 1, 2, and 3, are going to take you exactly where you want to be. But when you focus on this high probability trend trade, when you focus on that trend trade that happens after a termination condition on the 13-2 chart, guys, I'm asking for 10 to 20 trading days. That's it. Focus on the best of the best. What it's going to do for you is it's going to teach you to read your charts. Safia, I thought you were on a plane today. It's going to teach you to read your chart. Monday. Okay, well, I'm glad to see you here today. And I'm glad that I'm here today. I'm excited. John Novak came down with Corona. Good morning, Indu. And while the brain is sharp, the body is weak. So we're forcing him to rest a little bit, catch his breath, making him watch movies, which if you've ever met John Novak or spent any time talking to him, that's like asking a Tasmanian devil to just sit still and be quiet. He's on the mend, but his brain doesn't do well sitting still, so keep him in your thoughts. As 90% of what we do is going to be chart reading, and chart reading mastery incorporates 3 essential elements. You're going to be able to open up your charts, look at them, and understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. Guys, these 3 basic, simple concepts are going to take you to places you never dreamed possible. Hey, good morning, Racha. And your ability to read charts is going to sneak up on you. You're going to wake up one day, 5 days in, and go, oh my gosh, I knew that was going to happen, or I knew that the chances were likely that that was going to happen. Hey, this is a pattern that I recognize. This is exactly what my first advantage looks like, and this happens fast for you. But it relies on you being focused. It relies on you allowing it to be simple, right? The high probability trend trade, guys, is 3 rules. That's all it is. 3 rules that provide 3 very distinct advantages through your chart reading. And those rules are, your large chart needs strong trigger lines, and we're going to talk about exactly what that means. Your large chart needs nothing in the way, no termination conditions, room to profit targets are true. And then your small chart, we're going to use as an entry chart. And it simply means we're going to use a limit order at areas and triggers. And guys, this creates what I like to call the equation for a trade, the recipe for a trade. A trade is nothing more than momentum, clear path, and an entry area. And each of these words in yellow is an advantage that's provided by those 3 simple rules for a high probability trend trade. So we're going to focus on 3 rules, guys. The first hour of this classroom is making sure that you understand. The second hour of this classroom, we're going to look at your charts. We're going to see what you've been doing today. And that last hour, I love to dedicate to making sure that you guys are asking every question you can think of. But don't hold your questions till the last hour. I want to see them throughout the whole day. Guys, these 3 rules happen on 2 charts. Those of you with busy brains are going to want to make these charts do more than they're supposed to. We're going to use this 13-2 chart, guys. It's a broad stroke of a brush, and you're only going to use the most current bar. And the most current bar is going to tell you quite a few things. It's going to tell you the overall trend of the market. If the background is green on your 13-2 chart, you're only looking for long trades. You're looking to trade with that trend. Indu, I'm not. If you have a specific question, I'd be more than happy to answer it probably after the first hour. John Novak was going to be teaching market flow today, and he sends his apologies, but he did get corona, and he's a little winded. It's going to be hard for him to talk in complete sentences, so we're going to push that date back a little bit until he's healthy. But of course, if you post a picture in here and you have a question about market flow, I'm not going to stray from the question. I'll give you all the information that I have. Guys, if the background on your 13-2 is green, we're in an uptrend. If it's red, we're in a downtrend. The first advantage that a new user can give themselves is just trade with the trend, guys. Don't fight it. There's no reason to. He will, Indu. Thank you for that. If I see opportunities in market flow today, I'll try to throw them in, guys. But if you have that 8 range chart fired up and you want to show me the 3 charts together, I'll talk about anything and everything that I can with it. Guys, it's Friday. We're just going to have some fun today. Your first 2 rules for a high probability trend trade, ladies and gentlemen, are met on a 13-2 chart. You're going to look for rule number 1, strong triggers. You're going to look for rule number 2, no termination conditions. And this chart's a broad stroke of a brush, right? It's like painting the side of a barn. It's going to give you that overall look of what the market is doing. On that 1 bar, you're going to be able to gauge these things. When the rules are met on the 13-2, you're going to turn your attention to that 5-1 chart, that smaller, faster chart. And this is where we're going to use rule number 3, where you're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And what you're doing is you're refining that broad stroke of a brush. You're taking a chart and only 1 bar. Let's bring this up. Here's my refinement picture. What happens in that 1 bar on the 13-2 is going to happen in like 15 to 30 bars on the 5-1. So we take this overall broad stroke of a brush right here in the black box, and all of these bars are coming to be inside of that 1 bar, so we can whittle it down to that one perfect area, that area where the market is likely to continue. Is everybody comfortable with this? We're going to let rules 1 and 2 be met on the 13-2, and then we're going to look for entries on the 5-1. Allow the 5-1 to be your entry chart. Don't let it scare you out on termination conditions. Don't let it scare you out on trigger line looks sometimes. We're going to focus and keep it simple, guys. So let's go through the rules. Rule number 1 says that you have to have the advantage of momentum, right? Strong trigger lines. What's a strong trigger line? Guys, you're going to be able to recognize this in the next 10 minutes, and you're going to be able to recognize it pretty consistently. In an uptrend, the small triggers are above the large triggers. The large triggers are wide. They're angled in the direction of the trend. Guys, it's the space created between the two that lets me know that the odds are favorable for the market to continue up. So you're going to hear me refer to this as odds favorable momentum. In a downtrend, small triggers break below the large. The large are widening. They're angled in the direction of the trend. It's that space between the two that lets me know that the odds are favorable for the market to continue down. Guys, this is your best look from the point where they accelerate and those large triggers are in the same direction. That space is created all the way until they return and work their way inside, because when they work their way inside, we call this a weakening of the large triggers. When you weaken large triggers, you take away your advantage of momentum, and anything can happen up or down. And guys, for your first 20 trading days, we're going to focus on trades that only have that advantage of momentum. What you're going to realize is that it doesn't happen necessarily at the bottom of the move, and it doesn't always go all the way to the end. So from that point where the smalls accelerate away from the large until they return, we're going to look for opportunities for a high probability trend trade. That's what these circles represent. These wicks and tails on a 13-2 chart, if I go back and study historically, these wicks are potential entries on a 5-1 chart. So I'm going to start training myself to recognize odds favorable momentum, looking for the beginning of the move to the end where those trigger lines are their strongest. And guys, if you see a circle, if you see a tail, I want you to go back. I want you to circle it historically. We're going to do that right now. This is crude oil, and I'm going to load a template that only puts trigger lines on here. Will you guys help me out with this? We're looking for that point where the smalls break away from the large are wide, they're angled in the direction of the trend. Does everybody see how we have odds favorable momentum to the downside, that red trend? If I take my circle, if I take my ellipse, I'm going to circle that tail because this is a potential entry. And we're going to come back and look at these entries after we discuss the rules for them. But I want you to do something. I want you to go back and I want you to get in this habit, and I want you to use this over the weekend to study. Look at this, in the moment. And what you're going to find is that these opportunities present themselves throughout the day, but there is a level of patience getting from one to the other. There is a level of patience that's required because sometimes you'll have odds favorable and there will be a potential entry, right? And sometimes you won't have the advantage that you need, And you have to sit on your hands and you have to wait and you have to be patient and wait for that absolute best of the best. Guys, is everybody with me? The first thing you're going to do, the first bite of this giant elephant, is recognizing odds favorable momentum. When you have the advantage of a market that's likely to continue in the direction of the trend. So far, so good, right? Easy, focused, simple. Guys, once we have all this momentum, we have to make sure that there's nothing in the way. We have to make sure that we have the advantage of a clear path. Rule number 2 says no termination conditions. So what is a termination condition? Guys, it's really just a simple comparison between triggers, between areas and trigger lines. Those same trigger lines that give us momentum, we're going to compare when they reach areas, guys. And those areas could be a divergence high, red resistance, yellow 1-to-1s, blue Fibonacci support, or a cyan divergence low. It can be a mid-band if the large triggers remain a full bar away. So guys, which chart, here you go, this is your pop quiz, first quiz for the day. Which chart am I looking for termination conditions on? Who's going to get bonus points today? I've got a roll of gold stars just waiting for you guys. When I'm looking for those termination conditions, absolutely, 13-2, guys. Did you guys know that if you say the same thing over and over and over again, eventually you believe it? If you repeat over and over, your brain latches on. Whether it's the recipe for recognizing a termination condition, there you go. Or whether it's you telling yourself that you're not a good trader because you made one mistake. Use language, guys. Support the learning process. How do we determine a termination condition? So easy. Price reaches support, guys. Look at this. Price comes all the way down to Fibonacci support. If price reaches this blue area, check your trigger lines. If they're not below the area, it's a termination condition. You no longer have the advantage of a clear path. I want you to think of these areas, guys, these are brick walls. And when price reaches one and none of your trigger lines go through, this needs to become a big red flag for you. This needs to be a giant stop sign that says no more trades, right? It's easy to fix the good things. Joel, life is nothing but good things, with a couple opportunities to make us appreciate them more. Guys, if price reaches support and absolutely nothing breaks through, we're not taking short trades. This is what we call a termination condition. This is an area likely to stop the market. The rules say wait for an area to clear, wait for an area to break before continuing to take trades in the established trend. Your area is broken when your small triggers and your large triggers go below the Fibonacci area. So up here, price reaches support. Absolutely none of my trigger lines have gone through. I am 100% in a holding pattern. I'm waiting to see if this area breaks. When both my small and large triggers break through this area, guys, I now have that advantage of a clear path. Smalls through, large through. Let's look for those rules to be met. Absolutely no triggers through. Just sit on your hands, wait for that clear path. Is everybody comfortable with that? It really is that simple. If price reaches an area and the trigger lines don't break, guys, you don't have a clear path. You're forfeiting that second advantage that gives you a high probability trend trade. And then there's one more. Sometimes those small triggers are going to smash through an area. The large triggers are still going to be above, so we don't have a clear path yet, guys. And I draw this picture every day. Remember, we're focusing on high probability trend trades. This is going to be your first medium probability trend trade. This is what we call a 50-50, and it means that the small triggers are through and the large triggers are not. This is an area with the potential to break, but has not broken. Is everybody comfortable with that? There's no guarantees, ever, but there's less of a guarantee. If the small triggers are through with odds favorable momentum, The large triggers are not. It has the potential to break, but it hasn't broken yet. Guys, you do not have the advantage of a clear path. However, let me make this a little smaller. If entry conditions are perfect on a 5-1 chart, take one shot at the area breaking, because with that odds favorable momentum, it certainly does have the potential. If I detach my screen, then expand it, I'm not sure how to detach my screen. Oh, you're talking about the chat room. Absolutely, I use the pop-out every time. In the bottom right-hand corner, guys, of your chat room, there is a pop-out window. It makes everything bigger. Yeah. So, guys, give me a Y in the room if you're with me on this one. We have no triggers through, no trade. It's an area likely to stop the market. All triggers through, we have a clear path. Small trigger through with odds favorable momentum, we have the potential to break. Everybody comfortable? Love it. Let's move on. Guys, if you have a question, always ask. Price reaches resistance. 0 trigger lines through. Simple recipe. No long trades. Absolutely, Cal. You're comfortable taking a picture, right? I've seen your pictures. So, Cal, when you take that picture, are you using TechSmith or you're using TechSmith, right? TechSmith Capture? Take that picture, and you're comfortable getting to this point. Right here, dead center, is a call out button. It's a click and drag tool. So I'm going to left click on my mouse and drag it right down to the right, and see how it creates that box. And then you just type. Give it a go. But in order to use the call out function, you have to left click and hold it down and drag diagonally. It'll put that box there for you. Absolutely. Guys, these pictures are important. These pictures are how we have a conversation every day. Price reaches resistance. No trigger lines through, no trade. Guys, how simple is that? You either have the advantage of a clear path as a brand new user, or you do not. Price comes all the way down to support. Absolutely no trigger lines break through. No short trades. Termination conditions above you, termination conditions below you. Guys, 90% of what you do during the day is going to be reading your indicators and waiting for an advantage. 90%. 10% having that odds favorable momentum, having that clear path, and then taking those advantages. Guys, you'll see up top, price comes all the way back to resistance, a divergence high, resistance again. This is what we call a pivot stop out of a divergence high. When divergence prints and then price trades above it from a high and then back below, guys, this is a very powerful termination condition. When it happens at Fibonacci resistance or support, it becomes even more powerful. We're going to give you one definition when it comes to termination conditions, guys. I'm going to go caps lock on this one. A strong top or bottom means that a termination condition has created a full reversal. Feel free to write that down on a piece of paper, type it on something, take a picture of it. When a termination condition creates a full reversal, large go from green to red, and then we end up with odds favorable momentum. Guys, this is what we call a strong top. This is the basis of that highest probability trend trade. Focusing on those trend trades that happen after a termination condition on the 13-2 chart is your best chance for success as a brand new user. So if that's a strong top, let's take a look at a strong bottom. Here we have a termination condition, right? Price reaches 1-to-1s. Trigger lines remain above. I know that I'm not taking a short trade because I've given away the advantage of a clear path. Well, these large triggers go from red to green. All of my trigger lines make it above this area of resistance, letting me know that resistance is broken. It'll probably act as support. I get small trigger lines outside of the large, and guys, there's one of those circles. A 5-1 trend trade that happens after a reversal on the 13-2 is your absolute best chance of success. So your ability to identify a termination condition not only keeps you from trading into an area that doesn't have a clear path, but it also helps you identify when you've got the best of the best happening and setting up, and this is the trade that you don't want to miss. Guys, give me a Y in the room if you're with me on termination conditions. Price reaches, where are the triggers? That's your whole recipe. And you're going to want to fudge it. You're going to want to say, but Mark, I had odds favorable momentum, but no trigger lines broke, right? Guys, look at this. Smalls are strong, large are wide. Does everybody see odds favorable momentum here? I love that look. That's my best look, isn't it? My smalls are above the area and my large are below. Guys, is this area broken or does it have the potential to break? What do you think? Give me a B or a P. Broken or potential? Potential. Ooh, I like P2B. Nice job, Racha. Guys, look at this. There's one of those tails. There's a potential entry. Trading with momentum, trading with direction. This is going to be your first medium probability trade that we talked about. That 50-50, right? What's a medium probability trade? Let's define it real quick before we get into our entries. A medium probability trade is defined when most indicators line up for a trade. However, a small issue exists. Your ability to read your charts through your focus on that high probability trend trade for a couple weeks is going to have you identifying these potential problems almost instantly. This is going to be the vast majority of your trades, and when you're executing medium probability trades, you're going to take them and manage them assertively. You'll be able to manage them assertively because of your ability to read your charts. If there's trouble in your way, you may take a portion of the position off at the trouble spot, reduce risk to a zero loss level. So going from high probability to medium probability, guys, that's a natural progression. It's one that's going to happen. But if you focus on the 3 simple rules initially, if you focus on learning to read your chart, it's going to open up the door for that medium probability trade and let you know when the advantages are present. But sometimes the market's going to turn from the middle of nowhere. Remember that we don't control the market. We're trading patterns that have been proven to give us a statistical advantage. No fibs from a low, no fibs from a high, guys. I'm going to give you your final termination condition. This is a termination condition that happens on every chart, every time frame. The higher the time frame, the more powerful it becomes. But this is one that you're going to see on a 5-1 chart. This is the only termination condition that I want you looking for on your 5-1 chart. And it's 3 divergence in the same price range. It may terminate the trend, and this becomes very powerful when the small triggers work their way inside of the large triggers. Is everybody comfortable with what divergence means? When price comes down and creates this pivot, meaning the market goes from down to up, the market goes from down to up, and we get a third pivot right here, from down to up. When it creates these pivots, if there is a loss of momentum, and that loss of momentum is identified in indicators written in the back, it simply means that your momentum, represented by this black line, isn't following. Price is trying to push down, but the momentum is falling behind. If you see this 3 times, it may terminate the trend. Guys, if you see it 3 times and the small triggers work their way inside of the large, remember, odds favorable, anything can happen, it becomes more powerful still. And if that third divergence is higher than the previous or lower than the previous from a high, it becomes even more powerful still. It's a head and shoulders pattern. So if you see this on your 5-1 chart, guys, this is an opportunity for you to see change happening before you recognize it on that broad stroke of a brush. When you have these three divergences at a low or a high, it's going to help you identify maybe the market's turning before it reaches an area, whether it's from an odds favorable situation or an anything can happen situation. Those three divergences will help you identify change happening on the larger chart before you see it on the larger chart. So that is the only termination condition that I'm going to look for on a 5-1. Comfortable with that? If I see it on a larger chart on a 13-2, I typically expect larger moves the other direction, guys. All right, so we have odds favorable momentum, right? We have no termination conditions. Now we just have to get in the market. Which chart do I go to find this entry, guys? If my 13-2 has strong triggers, if my 13-2 has no termination conditions, I've got to go to my 5-1, right? I've got to go to my 5-1 chart. And let's pinpoint that entry, guys. Let's find the area where the market is likely to continue. And during the live market, this is going to be the look of your 13-2, of your 5-1 chart. When those triggers are their strongest, when there's nothing in the way, when we're in an uptrend, you'll notice that the large triggers are wide, they're angled up, they're stacked on top of each other. There's nothing but green bars, nothing but up bars. This is when I make the decision it's time for me to take a trade, and I'm going to focus my attention on these triggers, and I'm going to focus my attention on the areas that may fall within. Rule number 3 says that we're going to use a limit order to buy or sell a pullback at an area inside favorable large triggers. We're going to use a limit order. We're going to wait for the market to come to us. And we're going to buy or sell a pullback. What does that mean? Guys, a pullback is a small retracement in price counter to the underlying trend. If everything is going up, a pullback pulls down. Does that make sense? Everything says up, momentum says up, everything's going the direction north. This little pullback, this little retracement counter to the underlying trend is what we call a pullback. And then ideally the trend resumes. We're going to take advantage of this pullback to find our entries. So when everything says up, I'm looking at triggers, I'm looking at areas, fibs, mid-bands, or one-to-ones, guys. This is where trades originate. Fibs, mid-bands, one-to-ones, inside of favorable large triggers. My pullback begins with a reversal bar. What's a reversal bar? A reversal bar means that with all of these up bars, everything going up, I want to see a down bar. This is the signal that we've begun that small retracement counter to the underlying trend. When I get this reversal bar, I'm going to create a window of opportunity, guys. I can use it with a drawing tool. I can use it in my brain if I'm comfortable. But my window of opportunity, that area where the market is most likely to continue, is going to extend from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. What's a favorable large trigger? I'm glad you asked. Guys, the absolute best of the best, when I'm talking about favorable large triggers, I want to see the large and the synthetic as close to one another as possible, stacked on top of each other, because what this does is the tighter the trigger lines are one over the other, the smaller my window of opportunity has the opportunity to be. So when I get this reversal bar, I'm identifying mid-band, 2 areas of support, and one-to-ones inside of favorable large triggers. Your job as a brand new user is to put a limit order at the top of that window, maybe a tick or 2 above the highest point of support, and then just wait. And either the market's going to come and fill that limit order and you're going to be in a long position with the advantage of momentum, with the advantage of a clear path, and now with the advantage of having entered the market at the area where it's most likely to continue. Do you see how each rule provides a distinct advantage? And if you embrace those advantages, you've put yourself into a trend trade that typically wins 70 to 80% of the time. Your initial stop, your protective stop, goes below that window of opportunity, below those large triggers. where the market shouldn't go. And I want you to embrace that phrase, where the market shouldn't go. With everything saying up, with the momentum going up, with nothing in the way, and with a small retracement counter to the underlying trend, if the market continues to pull back below these areas, it's no longer your trade. You will be stopped out, you'll take a small loss, because anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. And losses are a natural part of a growing equity curve. But guys, I will never miss this trade because 70 to 80% of the time, this is my result. Is everybody comfortable with that? Why do we focus on this one trade for 15, 20 days? Because it teaches us to read our charts to recognize advantages, right? From the top of the triggers to the bottom of the triggers, your window of opportunity exists from the highest point of support to the lowest point of support. Because we wait for this window of opportunity, guys, we can reduce our risk. Our initial stop is below the window. When the trade begins to move in the direction, we can put it below the reversal bar. We can reduce our risk. Because you waited for the pullback, you've also increased your profit potential, right? On that great pullback. Guys, this is your high probability trend trade. Here's a picture of a window of opportunity to the short side. I identify the top of the triggers to the bottom of the triggers. It's the area within those triggers, from the highest to the lowest, where the market is likely to continue. We see another one right here, going to the upside when the rules are met. Guys, are there any questions about a high probability trend trade? The first part is just understanding the rules. The second part is practicing it until it becomes comfortable to you, right? Repeat what, Cal? Everything about it? Gotcha. I'll find the sum it up picture. All right, Cal. On the 13-2, we're looking for strong triggers, right? Small's above the large are wide, they're angled in the direction of the trend. K-Dog, I prefer the 13-2 synthetics. That's why we upgraded to it. One thing that the 13-2 synthetics do for you just visually is in order to have odds favorable momentum, don't you have to have trigger lines strong in the direction of a trade, right? On the 13-2. They have to be up. They have to be strong. You can't miss that on a 5-1. If you start looking at your 5-1 trying to circumvent the 13-2, you'll identify if your trigger lines are so far away or if they're flat and lifeless. I love the 13-2. That's just me. Guys, there's people that have been trading with Nexgen for decades that don't even use synthetic triggers, don't even use 5-1s. But what I've found is this is the easiest way to teach it. So Cal, this is your picture that sums up everything that I just said in one picture. Strong triggers and no terminations on the 13-2. And remember to study, guys. We can go back and circle these tails. And if they end up at an area of support inside of favorable large triggers, this is your recipe for a high probability trend trade. We're not trading the tails though, right, Cal? We're not waiting for this tail to form to get into the market. We know where it's most likely to form because of the areas inside of favorable large triggers. This is how you're going to study. This is how you're going to create the ability to recognize. Let's go to my charts. Wow, crude oil's been going crazy, hasn't it? There's another tail with odds favorable momentum. I'm going to put some indicators on here. Let's make sure that we're not trading in determination conditions on these tails, right? This one's broken through, small's above, right? I can keep that one, potential to break. This tail is going into an area of resistance, and absolutely none of my trigger lines have broken through yet. Guys, in the moment, that's a termination condition. I'm going to remove that tail. Here I very much have a clear path. Here I very much have a clear path. Is everybody comfortable with that? Haven't reached an area. Odds favorable momentum. I'm going to keep this tail at 9:02 a.m. Haven't reached an area. Odds favorable momentum. I'm going to keep this tail at 9:06. Smalls have broken through the area. The large have not. I'm going to keep this circle right here at 9:14. Racha, great question. Should we ignore the midband if it's still red? So Racha, when we talk about a midband as a termination condition, a midband acts as a termination condition if the large triggers are a full bar away. And what that means, you know I have pictures of it, right? I have pictures of everything. So Racha, this is when I consider a midband to be a termination conditions. If my large triggers, if I have room for an entire reversal bar to form before they hit those large triggers, this is that gap theory. Price is likely to snap back to those large triggers. So that midband acts as a termination condition. Does that make sense? In this case, you can see that those large triggers weren't so far away as price reached it. The triggers weren't so far away. Sam, who cares? Respectfully, it doesn't matter why it's doing it, right? We're just going to look for patterns. Guys, news might move it. News might. I don't know that ISM services has anything to do with news or with crude oil. Guys, can we look and see if we had an entry here? There's our circle. Let's go back to 912. Ooh, this market's been moving, hasn't it? We're right at the tail end of momentum. Does everybody see it? The smaller through, the larger not. Everything says up. Look at the circle on the tail. Where does it line up over here? Guys, it pulls right back to support, doesn't it? Stays inside of those large and synthetic, trending one on top of the other. If you got in at the very top, well, you had to sit through almost 10 ticks against you, but it stayed within that window. And then it continued up. Give me a Y in the room if you see it, guys. And let's go back and look at this circle, and let's see if it met our rules. Because ultimately, at the end of the day, it's either rules met or rules not. Cal, I need you to elaborate on why. Just a little bit. I need you to elaborate. What do you mean why? Why what? Why does the market do what it does? Why does it go up? Why does it go down? Guys, do you want some prefabricated, make me sound smart answer, or do you want the real answer? Why is it strong? Because the smalls are above the large. Because the large are wide, they're angled in the direction of the trend. The smalls have remained outside of the large triggers, and this is the best of the best look, right? So Cal, this is your step one that you need to become so comfortable with that you never miss it. This is 100% what we're looking for to start a trade. This is our best look. This is that strong trigger line, smalls outside, and what it means to us. And once you can identify this, well then now you've got the advantage of momentum every time you go into a trade, right? Yeah, it might be, Ron. So Cal, this has to be the first thing. If you try to bypass this strong look, if you try to say to yourself, well, you know what, I only want to work on entries, I don't want to worry about strong triggers, then you're upsetting the recipe, right? Trading is like baking. There's a little precision that goes into it. Does that make sense, Cal? It's strong because my T3 trigger lines tell me that I have a pattern that identifies strength in the market. But why does the market go up and down, guys? Large charts give us trends. Large charts give us momentum. Large charts give us tops and bottoms. It's the reflection of what the crowd is thinking. It's the easiest way to do it, right? Those little pullbacks that get us to our entries, that's a smaller group of people that are fighting the crowd. We love these people because they get us in the market so that we can trade with the big group and take advantage of what they're doing because the small group pushes us back. And then the one Ron's referring to, guys, this is how I see myself. The people that move the market that are trading millions of dollars, I consider them to be like sharks in the ocean, right? These guys say this Fibonacci support's going to hold, and then we're going to turn it around and we're going to make it go up and we're going to give it momentum. And I'm going to let them do all that hard work for me. I don't have to be first. I want to act as a remora, right? When they give me that odds favorable momentum, when they give me no termination conditions, guys, I'm going to take advantage of it with that entry, and I'm going to take my little piece of the puzzle. I don't have to be a shark. That guy tried to be first, and he's going down the gullet. So guys, odds favorable, no termination conditions. Did this pull back to an area of resistance inside of favorable large triggers? Can you see it? Let's identify the large triggers. Did price pull back to an area of resistance inside of favorable large triggers? This is the most valuable lesson of the day, guys. Are you ready? Nobody has any idea? Joel says no. Rules not met, right? And if the rules are not met, no matter what this does after, it's not my trade. Justin, it certainly does, doesn't it? Does it do it every time with such regularity outside of favorable large triggers that you're willing to trust one little pink line on a chart? Remember that rules create advantages. Justin, it's not even a maybe. Otherwise, I would be teaching you to jump in at a midband, wouldn't I? It works sometimes. Guys, you have to be willing to accept that sometimes the trade just isn't your trade. It just doesn't fit the rules, right? There's a little pink midband in the middle of nowhere, and it didn't do it. Yeah, we do. All we're looking for, Justin, you have an advantage. Let's find this one at 8:59. So we're going to piece it all together, right? Small's below the large are widening, they're angled down. Look how price pulls right back to those areas right inside of the favorable large trigger. So Justin, what we do is we've identified this pattern. We've identified this particular pattern that says when the conditions are right here and this is met here, this is a trade that typically wins 70 to 80% of the time with the advantage of a clear path. This is a medium probability trade. The large are still above, the smaller below, right? No divergence on the pullback. Tiny little window of opportunity. This is one of those 50-50 trades with a beautiful, perfect setup. So Justin, price loves to pull back to the large triggers. It really does. It's just a moving average. When there's something concrete inside of those triggers, Fibonacci support or resistance, one-to-ones or a midband, It's like throwing a tennis ball up against a wall. Does that make sense? And that's why we insist on them being inside of those trigger lines rather than trusting the ones that are outside, because they don't give the same advantage. And trust me, there's been an awful lot of back testing. But Justin, the flip side is that is there may be a time where you will take advantage. It's okay. Keep them simple, Justin. One of the things that we try to do as humans, guys, and I guess it's a flaw, or maybe it's why we're so damn smart, is we try to take a simple concept, right? 3 rules, 3 very distinct looks. Would you agree? Strong trigger lines are probably the easiest for everyone to come up with in the very beginning. What do strong trigger lines look like? Well, they look exactly like that. Very little room for interpretation. What's a termination condition look like? Well, termination condition, really very simply, is if the trigger lines don't break an area, we're not trading directly into it. It seems simple, but my brain in the beginning said, well, I have odds favorable momentum, so surely that area is going to break. Or I said, well, I hit it, but I don't really believe it. So stay focused on absolutes in the beginning and understand that as you grow, Justin, you're going to see things more. Because what happens is when you learn to read your indicators, you're going to have this fight that goes on in your brain, read versus rules. What am I reading? What do my rules say? So if you focus on the rules, like exclusively in the beginning, then you're going to be able to use your chart reading to take advantage. And you're going to see a million opportunities because of your reading. And you really have to stick to the rules. Seeing the market bounce off fibs and one-to-ones all the time, right? And you know what kills people, Justin? Is every now and then areas break. But when they break, they typically break with odds favorable momentum. But look at this. Price reaches the one-to-ones. Look at the odds favorable momentum going into those one-to-ones. What's your small chart say? It says if you broke your rule on the first one, it gave you a little push. Look at the multiple divergences. Yeah, you can see it on the small chart that we're slowing down on the large chart, right? And it doesn't mean that this area won't break, but what it does mean is that you're going to get chewed to pieces, right? If you're trying to predict if this is going to be one of the times that it breaks. Does that make sense, guys? But if you simply wait for it to get to the other side, if you simply wait for an area to break, or let the area hold, let the trigger lines roll, guys, you don't have to guess if you're going to have a clear path. You can identify. So let's go through it. What has to happen here? First, the small triggers are going to break through, right? So now we have the potential to break this area. You'll notice that your large triggers over here are beginning to roll. The large triggers are breaking through, but not quite. It still just has the potential, and we're starting to lose momentum. Is this a last-ditch effort by the buyers, or is this the sellers giving up and saying, all right, guys, take it up higher if you want to? We still don't know. Do you have to guess? No, of course not. Your rules keep you focused. So Justin, that's kind of my point right there, is if you just really focus on the rules at first and kind of let your opinions go to the wayside, it's going to prove to be advantageous for you. I know, because I've done it. The most expensive accessory I own is my opinion. And what's hard for new users is to believe that keeping it simple initially, because it is simple, it's almost remedial, right? But Mark, it's only 2 charts, it's only 3 rules. If a little information is good, can't a lot of information be better? I don't think so. I think if you focus on the advantage of momentum, if you focus on the advantage of no termination conditions, and you focus on the advantage of an entry inside of favorable large triggers, Guys, 70 to 80% of the time, right? Do you need more than that to be a successful trader? I don't think so. KR, my opinions not only slowed down my success process, my opinions cost me a tremendous amount of money. Trading what I hoped happened, what I thought was going to happen rather than my rules met, cost me a lot of money. Guys, this is your first 30 days. 20 trading days, that's it. That is a short time. That is a drop in the bucket, right? This is a plan that I've written out that I'm sharing with you guys. This is your homework this weekend. I want you to look over this and commit to it. Use the phrase, my trade is the high probability trend trade. In order to enter, guys, what you're telling yourself is that if you're going to pull the trigger to get into the market, this absolutely has to happen. I have to have odds favorable momentum. I have to have a clear path, no termination conditions. And I absolutely, positively, without question, have to have an area for entry inside of favorable large triggers. Cal, I thought I've already emailed this one to you, but yeah, I'll get you all these. No worries at all. And guys, here's where the work comes in. You're going to start taking pictures, right? You're going to take pictures every time your rules are met. And you're going to write on that chart and you're going to reinforce it. Hey, my rules are met. Steal them from class, study, go back and do those circle tails. Make sure that the rules are met. Guys, in the first 30 days, if you're taking 15 pictures a day, you're going to have about 300 pictures at the end of the first month. If you present 300 pictures in a month into this classroom, you're going to have 300 opportunities for one-on-one feedback with me about everything that you see in this picture. Don't post a picture and say, what is this? Post a picture and tell me what you see, and then we'll have a conversation. Guys, if you focus on your entries and only your entries in the beginning, great entries make easy management. We've got big news, guys, in 3 minutes. And then define your management plan. So the 3 attachments that I put in the room for you right now, grab them, are this example plan. I've given you a high probability trend trade checklist sheet that you can print out and put on your desktop so that you can police yourself, so you know what rules you should be writing on a chart. And guys, I've given you the same high probability trend trade checklist. Is the market coming from a good top or bottom? And pictures straight from the manual of what it means. What is odds favorable momentum? Picture straight from the manual, odds favorable. Termination conditions, straight from the manual. Entries, straight from the manual. That you can study each and every day, guys. I want you to take these and I want you to use these. Yesterday we talked, let's go to the ES. Let's see what news does. I'm going to leave this one up. Look at that. Small's above the large are wide. They're angled in the direction of the trend. I have an area with the potential to break, but it hasn't broken. There's my highest point of support inside of favorable large triggers to my lowest point of support. But news is coming up in 2 minutes. That market may act erratically. Let's see what happens. Guys, yesterday we talked about using the spreadsheet, right? We talked about taking pictures, putting them in here, and I gave you guys a challenge in the room, all my new users. I asked you, I said, how many of you have opened up this spreadsheet? Let's go to the one straight from the website, right? Sit on your hands, it's news. And I asked you guys, I said, how many of you have opened up 70 pictures of high probability trend trade? Ziba, you got through the first 2 green ones? It's perfect. It's all you need. Did it help? Did looking at 70 pictures of high probability trend trades kind of help you piece together what the look should be when the rules are met? Guys, is it? No worries. So Ziba, if one's hard to understand, take a picture, post it in the class. Let's have a conversation about it, right? Because guys, sometimes you may look at one of these pictures and you'd be like, Mark, am I seeing this right? Is this what I thought it was going to be? I recognize this trade. This is one of my trades. Odds favorable. No termination. What you're looking for, Ziba? Did you have your checklist in front of you as you looked at it so that you knew to look for an area of entry inside of favorable large triggers? Does this one fit the rules, guys? Small's breaking below the large are wide, they're angled in the direction of the trend. There's absolutely nothing in the way, right? Look at this pullback to the area of resistance inside of favorable large triggers, all the way down to the fib. Guys, I remember taking that trade. What a beautiful, easy, effortless trade. That one was fun. That was one of my 70%. The other thing you're going to recognize from the spreadsheet is part of that 20 to 30%. As the market, look at this. It's perfect. Odds favorable. No termination. Pull back to the area of support inside of favorable large triggers. And this one gets run over. Anything that wins 70% has to lose 30%. So Zeba, anytime you guys go through, and if this is your weekend homework, Christina, if you click on a picture and you're like, wait a minute, what's going on here? All you have to do is take your snag it, take your capture, right? Take that picture and use that call out. Hey, Mark, help me on this entry, right? And Zeba, if you do that and you bring it to class, here's the best part. And guys, I'm telling you, you're giving me job security when you do this. Now we have something to talk about. Now there's a question that you get clarity on. And you've probably helped another 10 or 20 people in the room because of the question that you ask, right? I need that job security. Guys, there we go, trading right into news. Why don't we trade into news? Because silly things happen. And check that out, though. It still pulled back to an area of support inside, went up, multiple divergences. Good stuff. Guys, I'm going to reload my water real quick. I'm going to leave you with the S&P. He is, Joel. He's just, he's tired. A lack of oxygen has him tired right now, so he's doing all right. Who asked about the midband? Indu, right? Guys, here's your gap theory. Price reaches an area, accelerates away from those large triggers. This is your reversal bar marker. Does everybody see it? This is the point where this bar becomes a reversal bar. If your large triggers are above that reversal bar marker when the area is reached, the potential is that it'll snap back and close the gap to those triggers, guys, which means that trades taken in this area here, this vacuum, are less likely to work. It doesn't mean that they won't work, but it means that you're giving away some advantages. Figured I would take that picture, and then sure enough, this is that news fueling it. We're going through. Smalls through the area, large or not. Potential to break, but hasn't broken. Here's the top of my triggers. There's the bottom of my triggers. Here's the lowest point of resistance. For now, there's the highest point of resistance. Guys, I'm going to take a few minutes. When I come back, we're going to take a look at your charts. We're going to see what you're doing. We're going to answer your questions, and we're going to move into the second hour and have a good time. Stand up, stretch your legs, guys. Back in a minute. Man, the market moved down, didn't it? And then we got a 50-50 trade. Smalls are through, large are not. No divergence, pulls back right to the area of resistance inside of favorable large triggers. My chart reading identifies my first trouble spots. Guys, is everybody comfortable with what just happened here? Do you see it? So what's your job? Guys, I want you to do this right now. Take a picture of the market. And let's annotate a chart together. Rule 1 is met. I have odds favorable momentum. Rule 2 not met. I have a 50-50. But with odds favorable momentum, this area has the potential to break. So I go to my entry chart, right? Is it just me or are these fonts too small? Let's get them a little bigger for the people in the back row. Is everyone with me so far, though? My money is worth a perfect entry on the 5-1 if the area hasn't broken yet. No divergence, strong triggers, small window. Guys, this is the perfect. Jose, you and I seem to be off a lot. Let me get through this and let's see what we can do. Guys, is everybody with me on this one? Odds favorable, 50-50, absolutely perfect look, right? No divergence, small window of opportunity. This is going to be your first medium probability trade. So guys, show me what you got. You reconstructed the chart and it keeps being different. So Jose, when you say you reconstruct it, are you deleting your workspaces? Deleting all of your historical data, deleting your templates and starting fresh? Totally? All right. Jose, are you 10 days back? Are you on micro or are you on the big order? You are 10 days back? You're on mini, not micro. Okay. And you're looking at the S&P, not crude? Is your clock set to Eastern or is your clock set to... It is set to Eastern? Man, we're checking all the boxes. If you look at... Guys, this is just troubleshooting. If you look at your data, does it say do not merge? Yes, NG. They are. Jose, does it say do not merge? And guys, I'll always pause class for a second to try and help out if I can. Okay, so there you go. We found the difference, Jose. Make sure that it says do not merge. And that'll probably fix it. And that was giving a fish. And Jose, check it out. In the software user guide, when you go through the daily performance, daily computer performance, that's Norton. But when you go through on NinjaTrader, that's one of the things that it says, make sure that you're on Do Not Merge right there. So let's see if that fixes it. Yay! I love troubleshooting, guys. That's fun for me. Jose, fingers crossed, brother. All right. How come nobody's showing me annotated charts like we just did it? Shouldn't you be showing me that? Practice, guys. Practice, practice, practice. All right, I'm going to go in. We're going to start looking at some of these pictures you guys have posted in the room. Let's have some conversations about it. What do you say? Joel, we're going to start with you, my friend. Joel likes to post early. And Joel, you probably don't know this, but you sparked a couple pictures this morning. Joel, you're saying at the time of entry you had odds favorable momentum, right? You marked it on your checklist. You even wrote it on your chart. It's all about policing ourselves. So I like to ask, and guys, I'm never beating you up, right? Is that an odds favorable momentum look? Ziba, what do you think? No. I agree. The smaller up, the larger down. And that's okay, right? Guys, you got to make mistakes. If you don't make mistakes, how are you ever going to get better? But do you see how, and Joel, do you see how you told yourself that you had odds favorable? Do you see how you told yourself that you had odds favorable and you really didn't? So this is where you have to go back and you have to re-annotate this chart, Joel. All right, this isn't my best look. This is my best look, right? And it's okay to be patient. It's all right to be patient. But guys, honesty and annotation helps a lot. Joel, why do you have so many options on your checklist? If you're striving for consistency, Joel, doesn't it make sense? Call me crazy. Take a deep breath and a step back and really focus on the simple. And then once you're comfortable and consistent with these, add some stuff. You don't have to. You can do whatever you want, but this has been a path that I see for a lot of people. The more things you're looking for, the more opportunities you have to convince yourself that what you're seeing is the right trade, rather than keeping it small and concise and focusing on those 3 simple advantages that work out so often. Let's look at your next one. Joel, 50-50 trade, right? Smalls are through, large are not, divergence prints. Medium probability trade. You did have odds favorable. No termination conditions. Well, you had a 50-50. So there's another one of those. I know. So Joel, there's another one of those 50-50s with divergence. Taking your money. So this is what we call a pattern, guys. And this is one of the great things of posting in this room. And Joel, you're not going to break patterns in a day. Nobody breaks their bad habits in a day, guys. It just doesn't happen. But you're creating an awareness, right? Joel, do you win or lose this trade more? 50-50 with divergence, you lose more, right? Is it okay, Joel, to just skip it for a while? Take pictures instead of trades? And start doing that chart reading. Well, when does this one tend to win? Well, maybe it tends to win from great termination conditions. Maybe it tends to win. So it's okay to just take a lot of pictures. If something's taking your money, guys, find out why. It might just be that the market's an asshole. Pardon my French. And sometimes it will be. Sometimes we will respectfully let the market be wrong. And then Joel, look at this one. There's a 50-50 trade, right? With odds favorable momentum, with no divergence, with strong triggers and a tiny little window of opportunity. That's your 50-50, isn't it? That's the one that is chock full of all the good things, right? Sorry, you got it, Ziba. That's the one. No divergence, strong triggers, little window. Man, that's the one, Joel. So guys, if I'm writing a plan for myself, I'm saying, all right, right now I'm taking what I see, what I think. I'm going to formulate rules that say if there is a 50-50 trade, if the area has the potential to break as a brand new user, until I have the repetitions to really discern whether or not the advantage is there, I'm going to insist on no divergence. I'm going to insist on strong triggers. I'm going to insist on a tiny little window of opportunity, right? And didn't we do that one earlier? So Joel, here's my gift to you. And guys, for all you other new users, in the beginning, this is your best of the best. This is the one that's going to create that confidence through the memory of success. As you grow with the software, you better believe you're going to take more trades, guys. But if you focus on keeping it simple, does it feel better to win or lose? Ask yourself that. I'd rather win. So for me, I'd rather take a trade that's been proven to win 70 to 80% of the time, because then I'm creating that confidence through the memory of success, and I'm amped up and excited and ready to move forward with the software because I keep putting myself in that best of the best position. Guys, excuse me just 1 second. Guys, you know every day around this time, I have the absolute pleasure of saying goodbye to my wife. Paul, let's see what you got. Paul says, I've got a termination condition that creates a full reversal that gives me odds favorable momentum with everything screaming down. Paul says, why not take an entry at an area inside of favorable large triggers, no divergence, strong triggers, and let's make some money. Paul, can I put you on the spot and ask you a question? Hey, Jerry S. You're absolutely right. Paul, did you have a worry in the world when you took this trade? With the advantage of momentum, no terminations, coming from a termination? Is there any reason? Did you hesitate? He is, Jerry, thank you. Got to meet your boy through here. We got the next generation, next gen trader. I love that. Josh is killing it. He's doing a great job. You've done a good job with him. Guys, this is the one that you're going to study and trust, right? This is the one that you're going to have. I mean, wild horses won't drag you away from this entry. Look at the advantages. So what should you do right now? Guys, right now, what you should do is right-click and copy, right? Copy that picture. And when you copy that picture, go to your spreadsheet. And Ziba, if you steal the picture and put it in your spreadsheet, you'll be able to zoom it on your end as well. But let's call this one Paul's perfect high probability trend trade short. And we'll go back and study it, right? There's one more in the mix. Nice job, Paul. And then Jose was right behind him, and I have a feeling we're going to see the same thing from another user. Let's take a look. Let me scroll back up. I'm going back and forth here. Jose trades. Let's see what you did, my friend. Exact same, right? Coming from a good top, you meant top, not bottom. Odds favorable, 50-50, no divergence, triggers outside. Jose, you got in a lot low, didn't you? All right, Jose, are you with me in here? I got you. I'm sorry, Ziva. I go back and forth. I go from big to small. Yeah, that was earlier. Do you see how you got in early? You got in at a divergence high and not at an area inside of favorable large triggers. Getting in up here at the mid-band probably would have kept you in with all of these advantages, giving you a little more wiggle room. You got stopped out at 12 ticks, but your 12 ticks would have been in a much better spot if you waited for the area inside of favorable large triggers. Does that make sense, Jose? And not just Jose, does that make sense to everybody? Why do we wait for those areas? Because this is the point where it's most likely to continue. Great trade, great read, Jose. Just a little bad luck on getting in a little bit earlier and not being willing to put more than 12 ticks on that trade with all those advantages. Okay, Racha, you asked what to interpret from this chart. So guys, remember when we talked about this, when you post a picture, don't ask me what I see. Tell me what you see. Racha, what do you see on this chart? Are you in here, Racha? What do you see on the 13-2? I can tell you all day long what I see, guys. I want to know what you see. Racha, what do you call this? Racha, what do you see with the large triggers as it reaches the mid band? Right? So termination condition, right? Awesome. So Racha, right on the chart, termination condition. Termination condition creates a full reversal. So I know that I'm looking at a strong top. Full reversal gives me odds favorable momentum. And what I'm looking at is as price reaches this mid-band, the large triggers are above the reversal bar marker. So I'm in a holding pattern. I'm waiting for things to catch up. Racha, if you get in the habit right now, rather than just showing me a picture, just tell, and it doesn't matter if you're right or wrong, does it? Because you and I are going to have an amazing conversation about it. You might go termination condition, full reversal, waiting for the short, and then you and I get to have a conversation. Racha, look at the distance back to the large triggers. Wait a sec and see if it closes. Pretty awesome, right? So Racha, now you and I get to have a great conversation about everything that you see, and we get to kind of test your chart reading and see how you're doing and how you feel. Great picture, great lesson, guys. The more you write on a chart, the better we can gauge where you're at. We can see your comfort level, all that good stuff. Safia, question about the large triggers. Safia, are you with me? Price accelerates away from those large triggers, right? It just means that price moved really fast. Safia, this is a moving average. Sometimes, because of volatility, price accelerates away from this moving average, from these large triggers, really fast. And they just can't keep up. And that's where the conversation that I just had with Racha comes in. When these triggers lag and price accelerates and reaches the key Fibonacci area, it's likely to snap back. Does that make sense? And what do we call that, guys? That's the gap theory, right? That's that slingshot. If price pulls away too fast, the large triggers don't follow. It loves to snap back. So this is your opportunity, guys, to either, one, not take a short trade in the middle of that vacuum, right? To identify the midband as a potential termination condition. It's not necessarily a trade setup, but it's a pattern that you can begin to create expectations on. I love it. Guys, these are the best. If you don't know what you're looking at, just ask. We'll talk about it. We will talk about it every time. Great picture, Safia. And guys, this is chart reading, right? That's all that is. Reading charts, discerning the information. Christina, let's see what you did. Christina, you said you had odds favorable momentum on the green background, smalls outside, still working on the ideal. Small trade, but not a strong one in your opinion. All right. So we're looking at, and let me make this a little smaller, 4,396, 4,396. Short, short, exit, long, exit, long. All right, so we're going right here, right? This is the one that we're talking about. And guys, isn't this the picture that Racha and Safia just posted? Joel, you guess you don't know what? So guys, here's kind of the after. And Christina, this is a great lesson on that gap theory. Termination creates a full reversal. What are you lost on, Joel? The gap theory? All right, Joel. So do this. Go walk a lap. Go walk outside for a second. Take a deep breath. You're thinking about too many things at once. I have to do it sometimes. I tell myself, run a lap. I'm seeing too much and I'm thinking about too much and my brain won't let me keep it simple. Because Joel, you're an amazing chart reader, and if you're feeling lost, it means that you're trying to read too much. All right, so guys, this was Racha and Safia's. How come those trigger lines are lagging? Price accelerates away from those large triggers, hits the midband. So Christina, what we're looking at here is that gap theory in action. See how price came all the way back to those large triggers? I definitely don't want to go short directly into a midband, right? Christina, what's the one thing that you're missing out on when you talk about entries? Not waiting for pullbacks. You're looking to jump in, and that's okay. There's a lot of success to be had with that momentum style trade. But here we go. We get to recognize a pattern, right? Christina, you jumped in at the bottom. Look how far away the large triggers are. And it closed that gap, didn't it? So now we get to recognize patterns. You jumped in at the bottom. Look how far away the large triggers are. And it closed that gap. So you're getting a great lesson on a clear path here. If price accelerates away from those large triggers too fast, too quick, and hits an area, it tends to close the gap. So Christina, while you're looking for these momentum style trades, make sure you have room to that next area. Make sure you didn't just hit it. Does that make sense? I'm all for the momentum style, and I think you're really seeing it. But don't give up that clear path. That clear path has a lot to do with the success of this trade. The way you're trading it is very much the way Ron trades it. You're taking advantage of terminations. You're taking advantage of momentum. And it's that quick get in because you're not waiting for pullbacks, right? Rule number 3 has zero meaning for you. And that's okay because this is how your brain sees it. Get in when the area is clear. Get out when the area is hit, right? So look at how much more you could have made on this trade with that odds favorable momentum area not hit. And look at how you gave away the advantage of the clear path here. Christina, you're doing amazing. And what we're doing is we're refining the way your brain sees things. And we're picking out just these little itty bitty things to help you be a little bit more successful. Absolutely. Great picture. And exactly, Ziba, right here, rule number 2 isn't met because we reached that mid band and the large triggers are more than a full bar away. So we don't have the advantage of a clear path. Great read, Ziba. Is this fun for anyone else or is it just me? I love learning. I have such a good time with this. All right, let me see where I'm at here. All right, we just did Christina's. Paul M., I believe you're next. I hope you're in here and listening. Paul M., everything says up and you went short. Everything went... Nope, that was an exit. And then you jump in directly into resistance and you get out and then you wait for the pullback and that one works. Man, this is a good lesson here, Paul. Are you with me? See that? When you wait for that best of the best entry, it becomes effortless, doesn't it? Don't great entries create manageable trades? Paul, I really don't think that you could have. And all I'm looking at is a 5-1, Ziba. So we're going off the assumption that we've got strong triggers and nothing in the way. Here's the jump in directly into resistance. Doesn't work out. Paul's like, I got to get out of this one. Here's the pullback to the area of support right at the large triggers. And that's the one that runs. That's that patience piece. I love it. Great picture. Does that make sense, Ziba? All we're looking at is an entry chart. Before the area inside of favorable large triggers is reached, do you see his entry? So Ziba, let's ask, is it at an area? Did he enter the market at an area? This is his first entry right here. What you're seeing here is an exit, probably from a previous long trade. So let me do it this way, Ziba. Let's assume that the rules are met on the 13-2, right, Paul? Because I know that you're trading rules. This doesn't represent a pullback to an area inside of favorable large triggers, right? And Paul said, whoops, I jumped the gun. I got to get out of this one. He took a tick. And then there's his entry right at the area, right at the large triggers. And that's the one that went to the moon. Easy win. And that's it. Entries are on the left side. Exits are on the right side. So Ziba, this is just Paul taking a picture for us and saying, you know what, guys? Rule number 3 gives us the best possible entry. It gives us the least amount of risk, and it gives us the highest potential for profit. Excuse me. Does that make sense? Paul, great picture. Thank you for that. Trust the triggers, right? Trust the process. The rules are based on patterns. The patterns have been studied for decades, guys. We just give them to you. You get 20 years worth of knowledge right here in class. All right, Ron C. Is it just me or does it look like a slap fight? Looks like a lot going on with no advantages, doesn't it, Ron? How amazing that we can recognize it, stay out of that mess. All right, Safia, let's see what you did. Safia says 50-50, right? Small's below the large. She identified it as a 50-50, medium probability. Small's below, large above, no divergence. Look at that entry. I wish you could see the smile on my face right now. Look at that entry, guys. Right at a mid-band, inside of favorable large triggers. And don't great entries create manageable trades? Safia, I don't think that you could have done this one any better, to be honest with you. So new users, take a picture of my screen. She's already done the research. She's already done the annotation for you. Save it to screencast. Pull up your spreadsheet. And put it in your spreadsheet and call it. Sophia's perfect 50-50. Identify it as a 50-50 and come back and study it. It's beautiful. Sophia, great trade. Good read. Advantage of momentum, an area with the potential to break but hasn't yet broken. And you insist on that perfect entry on the 5-1 so that you can take advantage of it. I bet you Paul did the same thing. There's the 50-50, right? That one came from here. Right there, area inside a favorable. Money once, money twice, money 3 times. Paul putting on a class for us. Beautiful trade, Paul. Angela, good morning. Nice to see you. This was the perfect entry, not taken. Great. Even though she's not in the trade, perfect recognition, right? And then when those trigger lines begin to weaken, what did it look like on the 5-1? Trigger lines begin to weaken. Divergence prints. Broke all the rules on your entry. Anticipated the midband to be inside of favorable large triggers. But you did have 1-to-1s inside, right, Angela? You're right at an area of resistance inside of favorable large triggers, but what advantage did you, or what advantage did you give away when those small triggers returned to the large and divergence printed? We're losing momentum, right? So that's your small issue. Yeah. You get in a little low, that's okay, and it goes right up to that higher area without the momentum. And then the second higher divergence says that if you even stayed in that one, now it's time to get out. I don't hate this trade, Angela. I think you had the advantage of a clear path. You had the advantage of the areas inside. So here's a little notation, right? So Angela, when you're beginning to lose that momentum, right, doesn't it make sense that the top of the window may be an area for entry? I know that there's traders in here that say when I'm losing momentum when divergence prints on the 5-1, I'll just start looking for that higher area in case it gets to the top end where that resistance or that support is sitting. And it makes it a little more manageable. Because when we talk about the perfect entries, guys, we're getting in at the bottom of the window because of odds favorable. Great picture, Angela. Thank you for sharing that. Let me see where I'm at here. Man, you guys are doing a great job putting these pictures in. I appreciate it. Claire, we've got one from you. Let's see what Claire did. Claire says, as we're losing that momentum, right? Losing that momentum. Angela, you and Claire are on the same page. There's that entry. She keeps her stop in place above the areas, and then when that second higher divergence prints, Claire takes a rare loser there. Claire, I think it's a beautiful trade. I think you recognize the advantages and you managed out appropriately. Paul says if he sticks to the rules, it's becoming second nature automatic at this point. Odds favorable, 50-50. One divergence with the smalls outside. Paul will take it at the area. And he's prepared to manage out at the trouble spot. Paul, great trade. Great management. Sam. Oh, Sam, are you with me? I love this picture. What a great lesson we're about to have, guys. All right, Sam, when price hit this midband, do you see how the large triggers were more than a full bar away? This is the fourth time that we've seen this picture. This is your gap theory again, isn't it? And Sam, here's that same picture as it was happening. Trades inside of this vacuum as it snaps back to the large triggers typically get run over. Are you beginning to remember this pattern, Sam? I know you've seen it a few times. Guys, this is the gap theory. When price comes all the way down to that mid-band to Fibonacci resistance, if the large triggers don't follow, sit on your hands for a second. Price tends to snap back and close that gap. It'll keep you out of a lot of losers. No worries, you're doing great. Guys, it's not guaranteed to go back. Sam, you said you're taking advantage of the gap. Careful. There's no guarantees that it's going to snap back. All right, Paul, let's see what you did. There was that 50-50, right? Smalls outside, one divergence, quick profits, and then it got you at break even. No, Paul, you followed your rules, right? You had a divergence. You got in at the best spot. You took quick profits. Your rules say to move to break even +1. You followed your rules, Paul. All right, Claire. That's a weak top. That's a 50-50. Smalls below, large above. You're absolutely perfect entry. Profits. Divergence prints. Smalls inside. You exit with divergence. Claire, do you mind if I steal your picture and put it in my spreadsheet? I hope you guys are doing the same thing. Claire's perfect 50-50. Nice job, Claire. Great management. Great management. Guys, I want you to remember, if you have a question, ask, right? Buck, I'll get you in just a second and we'll find out. I'm going to scroll through and get these charts that were ahead of yours, and then we'll take a look. NG time, let's see what you did, my friend. NG time says, where's your 13-2 chart? I don't have any idea where your 13-2 chart is. Is that it? That's it. Look at that. Odds favorable momentum. No termination conditions, right? Beautiful entry inside of favorable large triggers. Profits taken, then break even. You get back in because the rules were exactly what they should have been. Profit taken, all that momentum into a trouble spot. You say, I'm not going to give too much back, and you're up a lot of money. Great job. You chased it a little bit. The triggers were strong. I think what you did is you just got back into a winning trade. That break even got you, and you're like, man, I still have every advantage. I have every advantage. It made sense to get back in, and you took advantage of it. Great trade. Guys, remember, the pictures are for the class, right? If you have a question, make sure you ask. Paul, 50-50 once again. Absolutely no divergence. In at the area, it almost got you. That was close. Profits all the way up, can't lose, looking for fibs. It's tough sometimes, isn't it? What's even worse is when you get stopped out on the low tick. But just like NG Time did, if you're taking the perfect trade, if you have every advantage, right? If you have every advantage and your stop gets hit because, you know, sometimes the market's wrong, is there any reason you can't get back in? Paul, if this got you for some reason, is there any reason you can't get back in and take advantage of it? I had to do this yesterday. Guys, I sat through the longest trade of my life yesterday. John Novak and I sat there and talked about the advantages for like, I don't know, 30, 40 minutes while this thing was going on. Let me see if I can show you this picture from yesterday, guys. This was a trade from yesterday. Every advantage, odds favorable, triggers up. Guys, I got in and I got stopped out low tick. And I said, but I still have every advantage on the chart that leads the way, and I took it, and we sat through this one forever, guys, and I ended up, I think, making about 15 points on it. John Novak and I sat and talked during this nonsense for 20 minutes. You still see it, right? I still see it. It still says up, right? It sure does. I still have odds favorable. I certainly do. That support's supposed to hold, isn't it? Absolutely it is. Guys, we chart reading 101 for 20 minutes. And then when it took off, it was easy money all the way up. So if the conditions don't change on your 13-2, then it's still a good trade, even if it overruns the areas. All right, Sam, let's see what you did, my friend. 50-50, perfect entry. I love it. Expected the gap theory to pull back, so you tried to buy at the fib. So, Sam, this isn't the gap theory, is it? This is just odds favorable. 50-50, area inside. Nice. Beautiful trade, Sam. What's the gap theory? The gap theory would have been if these large triggers were all the way down here where there was enough room. If they were below that point where a reversal bar could have been printed. Do you see it? Move target close to the magenta HVA. I like that. And Sam, that's just an indication that after this reversal bar, after this breakout bar, this is an area where a lot of sellers got together and said, you know what, we may push it down again here. I think that's great recognition of a potential problem, and what a great target on a 50-50 trade. Nice job, Sam. Great chart reading. Great chart reading. I love you guys are keeping me so busy today. Jose Trades, let's see what you got. Same trade, same results, guys. Beautiful. It makes me happy when I see all of you taking the same trades, right? We're all on the same page. We're all looking for advantages. Dave B, taking the same trade we've seen over and over, right? Odds favorable, 50-50, no divergence, perfect entry, money. And then, Dave, we start to lose that momentum. We start to lose that momentum. And you get high ticked on it. That's frustrating sometimes, Dave B, but I think you did it right. You're saying we're probably going lower. Let me put my stop where the market shouldn't go. And man, it's like they had a camera on you. Guys, remember, you can always exit with divergence and a loss of momentum, and if the rules are met, feel free to re-enter. Dave B, are you with me? Can I point something out on your chart? Safia, I think I did, and I think I praised you excessively because your trade was the same as this trade. And it was a beautiful recognition of odds favorable, a perfect recognition of 50-50 like Dave did, and a perfect entry at a mid-band inside of favorable large triggers. And I stole your picture and I put it into my spreadsheet. I hope that's okay because you did such a great job on it. All of you guys did. I want to be able to repeat it. Dave, do you see this reversal bar coming from the outer band with divergence? That's a good indication that the party's trying to end because you've already exceeded everything. You're at an outer band. You're losing momentum. You're losing momentum. You're losing momentum. This is almost one of those instances where I'll just take the money and then I'll wait and see if I get a great setup to re-enter. Does that make sense, Dave? Just a little extra recognition coming from that 8-range chart. See how your triggers have weakened and you've reached an outer band and you've got a reversal bar that's an antenna bar and divergence. A lot of indications that things might be changing using that market flow chart. Good picture, Dave. I'm glad you included that one. Might help with the management, might put a little more money in the bank on the next time. And guys, that's one of those market flow things that you can use as well. If you see this on a market flow chart, at a termination condition, maybe at a top, maybe a little stronger indication that things may be reversing. Dave B, I believe this is your second one, right? There's that 50-50 trade that we saw everyone else take. Beautiful. Perfect entries make for easy management. Off at the first trouble spot, profits at the second. Dave B, putting on a clinic today. Nice job. John Horde, nice to see ya. It looks like you set your limit entry at the top fib and waited for the market to come to you. The trade was taken within the large triggers. On reversal in the direction of the trade, hit target 1, move. John Horde, are you telling me that you had odds favorable momentum and no termination conditions and you took an entry at a pullback to support inside of favorable large triggers, and those strong triggers took you all the way up to the next key Fibonacci area? John, you're going to put me out of a job if you make it look this simple. Great trade. Way to follow rules, guys. The rules are there to give you advantages, right? All right, Buck Blue, are you with me? Buck Blue, let's take a look. You're playing to pull back to the support at the fib, support level on the 13.2. And you entered the trade on the pullback to the mid-band. All right. So, Buck, let's talk about rules. Are you using a checklist? And I ask because in the beginning, Buck, we're looking for 3 very specific things. We're looking for odds favorable momentum when the smalls are broken away from the large, accelerating. This is a beautiful look. We're also looking for a clear path. You have a clear path without question here. There's no termination conditions, but you don't have momentum just yet. Your momentum has decreased and really gone away at this point. Does that make sense, Buck? Here's odds favorable. Everything says the market's likely to continue. This is what we call anything can happen. We've lost that advantage of momentum. Make sense? Cool. And then when we look for that clear path, Buck, do you see how where you went short here? Price had already reached support. None of the trigger lines had gone through. You made a little money on it, but what happened is you traded into an area likely to stop the market, and it sure enough did. And then if we back up just a little bit, do you see how you're counting on that blue line, but you're fighting that odds favorable momentum against you? So you're recognizing support right now, and you're doing a great job of recognizing the areas. So your next step, and let's go back to the instructions real quick. Buck, I love this picture. So your next step is to let the market tell you that it has a great chance of finishing the move, that it has that odds favorable momentum. And I'm going to give you a checklist real quick for a high probability trend trade, Buck. And this one's going to do 2 things for you. It's going to not only talk about the rules, what we're looking for, but more importantly, this checklist that I just uploaded into the room is going to give you a visual of what it means for those rules to be met. So what you're going to do, Buck, keep doing what you're doing. Keep identifying those areas, but allow it to be simple and really break it down into this really simple approach, making sure that you have odds favorable momentum, making sure that there's nothing in the way. Absolutely. Buck, I'm here for you. Post as many pictures and questions as you can. And then refining that entry to the area inside, man, there's absolutely nothing that you can't accomplish with just a little bit of study, and you're on a great path. But let everything start with that odds favorable momentum, and it creates this huge advantage. Creates a huge advantage as you get into trades. Great job, Buck. Thank you for posting. All right, Gary, haven't heard from you today. Gary says 50-50, no divergence. I'm taking it at the area. A little tight there. And guys, here's a great example. Gary says, wait a minute, this is the trade. Gets in with market flow confirmation, makes all of it back. Gary, great recovery. Nice trade. All right, Paul. Trying to see where you got in here. Smalls are outside of the large, absolutely nothing in the way. You get one divergence, so you take that entry. Quick profits once again, Paul. I love how you take money right off the front. You've got your second target above the divergence line. I might be willing to give up a tick or two and go below it, and then you're looking for it to finish the move to the next area. Nice trade. Sam User, termination condition. Great read. Could you have taken the green signal into a termination condition, Sam? Would that have been a recipe for success? You could have, right? But what advantage would you have been given away? Are you willing to give away the advantage of a clear path? That's what you have to ask yourself. Jerry, take care. Thanks for popping in. And then, Sam, I'm going to answer your question with Christina's picture. So, Christina, very much. This is an example. This is an example of that gap theory. But isn't this a termination condition anyway? Didn't you already reach that area of support? Absolutely no trigger lines. Breakthrough. So we have a textbook termination condition. And then because the large triggers are above that reversal bar, from this termination condition, if there were no fib and it was just a mid-band, we could anticipate price having the potential to close that gap back to the large triggers. Do you see it? And Christina, very often when you see these pivots come from beyond the areas, this mid-band and this support really just acts as a continuation point. Price typically closes the gap, and very often it continues in the direction and just finishes the move of that trend. Great question. So Sam, does that give you your answer as well? This vacuum right here is where you should be very wary of short trades because price is likely to close the gap back to those large triggers. We saw that one. Paul, let's see what you got, my friend. Do what Mark says and trust this process. You'll get there. Steady, steady. Sam, you can do whatever you want, right? You can do whatever you want. But whatever you're doing should be proven to win more than it loses, right? What if the market doesn't continue down? What if you don't have odds favorable? What if you've hit a termination condition? Right, Sam? $218 million home for sale. Move in ready? I'm on it. So Sam, just because you see it, and Sam, you're getting to that point, and this is where I get so excited for you guys, is you're starting to read your indicators and see more, right? You're starting to read your indicators and see more. And when you see more, that's when you have to rely on trusting your rules. Because your brain's going to take what it sees and it's going to try to skip out on the rules. And guys, it's not what Mark says, it's what you say. Paul, thank you for that. That's nice. 3,382, right? Holy smokes. 30 trades, 27 winning trades. 90% wins. Absolutely. Paul, great job. All right, NG time. Guys, how we feeling today? A lot of chart reading. You guys are staying so busy. NG, are you with me right now? And I guess John got his second win. Don't make me kick you out of here. All right, NG. Guys, what does PSO stand for? Stands for pivot stop out, right? Absolutely, D. So is this a pivot stop out or is this a pivot? NG, this is just a pivot with divergence, isn't it? John. So here we just have a pivot. Your trigger lines don't agree. One is up, these are down, right? So this is just a pivot. No, it's just a pivot. Don't overthink it, guys. This is a pivot. The market went up and the market went down. Gary, your potential termination condition was 7 points below. So exactly. So in order for a pivot to become a pivot stop out, guys, this is a great lesson because this is common. NG, thank you for the post. Just a pivot with divergence. When price comes back and retests, exceeds and then goes above, the triggers roll. Now you have a pivot stop out. One is just a pivot. The other one is a termination condition. Does that make sense, NG? Cool. Great picture. Guys, that's a good lesson. Remember, a pivot stop out comes when that pivot gets exceeded by price and the triggers don't follow. You guys are keeping me busy today. I love it. I haven't even looked at the live market. You guys have been doing enough of that, haven't you? Guys, strong trending market. Dave B says, the smalls are riding the large. There's nothing in the way. Everything says go. So Dave B, there are some people that as they grow with the software and create recognition, they'll say that in a strong trending market, 30 bars in the same direction, everything says up, smalls riding. Some people will just keep buying a mid-band, whether it's in the triggers or not, until it doesn't work. Some people will do that, Dave B. Wink, wink. Some people say, I'm a brand new user, and if I don't have an area inside of favorable large triggers, I'm going to try and be consistent until I can recognize this enough to take advantage of it. Where you're at and where you'll be, guys. Always two completely different spots. New trader in 60 days. New trader, what are we looking at here? You didn't write anything on the chart. Guys, it might be 30 days, right? Why? So new trader, why did you do the trade? Did you do the trade because we had a termination condition? Can we annotate it together? What do you think? I got you. What are your rules, new trader? Are you looking for odds favorable momentum first? Are you looking for those strong trigger lines? If you are, can we agree that you had it? What's a strong reversal? Can you show me a picture of a strong reversal or from the top? So all of your trigger lines made it above resistance, right? You see that? So let's go through this one. This isn't a termination condition. This is the same talk that we just had with NG. This is just a pivot right now, new trader. All the trigger lines made it through the area. So this is just a pivot. It's not a termination condition. Does that make sense? And then let me find, of course, the other side of it. Yeah. So let me open up my 13.2 real quick. There we go. You see that one? That's a termination condition. That's a strong top all the way down to that mid-band. Does that make sense? Do you see the difference? No trigger lines through. This is an overrun on a 50-50 trade right at news. So right now, we don't know if this is a little overrun or if this is just a pivot, right? So new trader, as price pulls all the way back to support, what do we notice about the trigger lines when support is reached? No trigger lines have broken through, correct? Are you good with that? So can we identify this as a termination condition? So we shouldn't be going short into it. Unless you're willing to give up the advantage of a clear path, you probably shouldn't be taking a short directly into the area. And then new trader, do you see how the large triggers are above that reversal bar marker? So now we have the gap theory in place, just kind of adding a little bit. Price has the potential and is likely, based on historical patterns, to close the gap back to that large trigger. Which means that if you took this short for some reason on the 5-1, look at how far away those other triggers are. And see how we hit that termination condition? We're kind of in a holding pattern right now, new trader. We're waiting to see if price closes the gap back to that large triggers so we don't get caught here in that vacuum. And we're also waiting to see if this is a little bit of overrun or if we're just going to continue the move up to that next key area. We're in a hurry up and wait pattern. Does that make sense, new trader? But if you get in the habit every time you take a trade, what's the recipe for a trade? Momentum, clear path, and an area for entry. If you get in the habit of writing on your chart every time you take a trade, identifying whether or not these advantages were there, then what you're going to do is you're going to start policing yourself a little bit. And the new trader, you can use this checklist. I'll put it in the room again, guys. If you haven't downloaded it yet, you can use this checklist to police yourself a little bit and give you that reminder in the moment, new trader. Print it out. Put it on your desktop. Does that make sense? The more you focus on rules, guys, the more apt you are to follow them. Great picture, new trader. Keep putting these in there. Gary, still just a pivot, no matter how many arrows, right? Everything is above the area, just a pivot. It might be overrun, but it's too soon to tell. It's too soon to tell. When are we going to know? We're going to know if it was overrun. My goodness, we have a lot of stuff done. We're going to know if it was just overrun if we get a full reversal and the market just continues down. In the moment, we have momentum down into a termination condition, right? An area likely to stop the market. K-Dog, send me 20 bucks. I'll send you a fib. Ha, ha, ha. Where are you missing a fib? And I know you were listening when I talked to Jose. K-Dog, did you correct yours to merge or do not merge? I think you and Jose had the same setting, right? So Gary, it may have been overrun, right? Maybe. I don't think Paul had it either. Someone didn't have it. So now we're just playing if then, guys. We're saying if these areas break, I'll start looking for short. See how the large triggers are back below that area? That's a good sign that this may have been overrun. Still too soon for a short, but I'm definitely not going long, right? I'm not going to fight those triggers. Does that make sense? Too soon for a short into a termination condition. Not going to take a long fighting momentum. Is everybody comfortable with that? Just rules, just chart reading. Claire, let's see what you did. Maybe overrun, we're not sure. Smalls get below, larger trying to turn. You took the pullback to resistance with the large down. Not really even a 50-50. You don't have odds favorable yet, but you do have room to get back to that area. And Claire, that's why this one worked so well. You had a clear path and you had the immediate momentum of those small triggers. And you used Fibonacci to help you a little bit. And you weren't greedy. But definitely not a 50-50 trade yet because you don't really have momentum. If you had odds favorable momentum, Claire, do you see how this wouldn't be green? It would have to be red, wouldn't it? Does that make sense? In order to have odds favorable momentum, the small and the large really have to be the same color, guys. If they're not the same color, it's not odds favorable momentum yet. Is it going to close that gap this time, guys? I don't know. Let's find out. Tell you what, while this decides whether or not it's going to close a gap, I'm going to go reload my water. I'll be back in just a few minutes. I want this last bit of the hour to belong to you guys. If you have questions, if you have pictures, I want you to post them. Going to dedicate this last hour to you guys. I'll be back in just a minute, and then we'll finish strong. Did anyone notice that price closed the gap to the large triggers? Can I get a Y in the room if you watched it happen live right in front of you? Guys, this isn't a trade, is it? What is it? This is a pattern that when price accelerates away from the large triggers and they remain more than a full bar away, price is likely to close the gap. Do you see it? What does that mean? That means that any short trades taken from the lowest point of this bar and the large triggers have the potential to get run over. It's not a long trade, right? It's not a short trade. Guys, it's just a pattern that's going to help keep you safe. That's going to help keep you from taking that short trade when the pattern says that it's likely to close the gap. That's all that is. Don't try and turn it into a money maker. Turn it into a money preserver. Because, guys, it doesn't cost you a darn thing to be flat. Doesn't matter, Zeba. We're not worried about that. Just textbook anyway. Price reaches support, no triggers above, right? Or no triggers are through. That's a termination condition on its own. Do you recognize that one, Zeba? Everybody, here's that clear path, Cal and Joel. Price reaches support, absolutely no trigger lines break through. That's textbook termination. Shouldn't be going short anyway. But if you're tempted because of what you see as odds favorable momentum, doesn't this right here, that huge gap back to the large triggers, reinforce that you shouldn't be breaking your rules? Does that make sense? It's not a trade, right? But if I thought to myself, you know what, to hell with it, I'm going short anyway, well, guys, there's one more giant red flag that says don't do it. That's all this is. That's all the gap theory does. I'm not telling you that there's opportunities for trades. What I'm telling you is that this short is probably going to get slaughtered. And then price pulls all the way back up to resistance. Where are your trigger lines? All of your trigger lines are below, aren't they? The small are below the large, but they're angled up. The large are below resistance. They're green. I don't have odds favorable momentum. I don't have a clear path. I don't have a clear path below me. I don't have a clear path above me. What's the market doing? The market's trying to make a decision right now, guys. We don't have to guess during that decision. All we have to do is wait for our rules to be met. So let's play if-then. If I get odds favorable momentum and no termination conditions to the downside, I'll look for a short trade. If I get odds favorable momentum and no termination conditions to the upside, I'll look for a long trade. Until that happens, guys, what's your best bet? What's the option that won't cost you a penny? Just wait. I took this picture this morning, guys. I'm going to share it in the room with you. What is this? This is rule number 1, guys. Here's a picture. Anything can happen, triggers right here. Smalls are inside of the large. There's no advantage of momentum. Does everyone understand that concept? Anything can happen, triggers. Awesome. Odds favorable momentum, right? All we're doing is identifying right now. We're just taking a second to identify advantages. Odds favorable. Anything can happen. Odds favorable. Odds favorable. Pretty good, right? Pretty simple. So check this out, guys. The larger down, the smaller up. The larger down, but the smaller above. Nothing to do here, guys. This is like a transition. This is what you're seeing right now. When things don't agree and it doesn't look like odds favorable momentum, sit on your hands. This is where most people are tempted to predict what the market will do. rather than wait for rule number 1. Gets traders into positions without the advantage of momentum. Does that make sense? You're going to, through rule number 1, be able to understand when things aren't in your favor, when you don't have the advantage of momentum. Awesome. Nice job, KR. Is everybody comfortable with that? This is your advantage. This is your advantage. Guys, this is where traders get chewed up. Rule number 1 keeps you out of the chewing. Made another picture. So Cal and Joel, here's your clear path, right? Rule number 2. Everywhere there's a cyan box, price pulled to an area, none of the trigger lines were above it, resistance is likely to hold. Price pulls to support, all of the trigger lines are above it, it's likely to hold. There's that pivot stop out, likely to stop the market. There's resistance, there's support. Do you see how precise and exact that is? Absolutely no trigger lines through, guys. You have an extremely decreased chance of success getting through that area. Cal, Joel, are you comfortable with that? Price reaches, absolutely no trigger lines break through. Leave it alone. I will. There you go. Small trigger lines break through, but the large don't. See the yellow boxes? Small trigger lines break through, but the large don't. That's the potential to break, right? But it hasn't broken. And look at how often that potential to break doesn't finish the move. Guys, that's where you start looking for those divergences. That's where you start looking for those disadvantages on the 5-1. You guys comfortable with that? Rule number 1 says let it be the best. Rule number 2 says have a clear path. What's a clear path? Watch this. We'll do it this way. Price reaches support. How many trigger lines have broken through? Have the small triggers made it through? One line has, but remember, both lines break through to be on the other side. So nothing's broken through, right? So guys, at this point, if you take a short trade, you're hoping that a blue line breaks, but no trigger lines have gone through to tell you that it will. And if you're counting on this blue line to reverse the market, well, aren't you fighting trend and fighting momentum? Guys, you're going to sit on your hands for a second. Small trigger lines break through, large trigger lines have not. We now have the potential with odds favorable momentum for the area to break, don't we? You guys with me so far? Potential. And it's only when both the small and the large break through an area that we consider an area to be broken, and we now have a clear path. Give me a Y in the room if you're with me. And then guys, if we have the potential for a break, no divergence, strong triggers, small window of opportunity, we can still take advantage of an area with the potential to break. But if you're a brand new user and you're not reading your charts instantly in the moment, give yourself the advantage of no divergence, give yourself the advantage of strong triggers, give yourself the advantage of a tiny little window of opportunity. Make sense? Does that help a little bit? Guys, you can do this yourself too. Backpedal. Price reaches an area, no triggers through, no trade. Smalls break through with odds favorable momentum. I can take a shot if it's perfect. I now have a clear path But now I don't have odds favorable momentum. Now I have a visual slowdown on my 5-1. Guys, the majority of your trades are going to be these medium probabilities. Let them be perfect, right? But in the beginning, is there any reason why you can't commit to odds favorable momentum on every trade? Is there any reason that you can't commit to a clear path on every trade? If you're not making money consistently, is there any reason why you should abandon these proven concepts? My goal is for you to get comfortable and confident ASAFP, guys. Remind yourself every morning, my rules are designed to keep me safe. My rules are designed to give me advantages. What are the advantages? Whoops, wrong one. Can I post this picture again for you? 3 simple rules, right? Strong triggers, no termination conditions, area for entry inside of favorable large triggers, right? A trade is momentum, a clear path, and an entry area. 3 simple advantages found on 2 charts, giving you the highest chance of success. And K-Dog, I don't know if you were in here the other day when we talked about it. I gave away the secret. I gave away the keys to the kingdom. Eventually you get more sick of losing than you do of waiting for your rules to be met. That's it. The hardest part about being a day trader, guys, isn't understanding the patterns. You'll understand the patterns in a week or 2. The hardest part is doing absolutely nothing when your indicators say there's nothing to do. Would you agree? I would. I've been doing this a while, and I can tell you that I get in trouble when my rules aren't met. I get in trouble when I don't follow my rules. But I'm also human, and I will break those mofos at every chance I get as a new user, because it's more exciting to be in a trade than it is to be profitable in the beginning. You just want to be busy. You just want to be active. All right, and I think John posted his little tirade here. You ready? I'm going to read this. I'm glad I didn't lose it. Imagine Elon Musk saying, your job will pay you $1 million a year. You must sit there for 2 hours and do nothing. And then you must make a few mouse clicks, right? At the right time with the rules we give you. Then just sit there for 2 hours again. Then just sit there for 2 hours again until you make a few mouse clicks when the rules we give you are met. Guys, would you follow Elon Musk's directions and rules for $1 million a year? Right? Would you? Stop messing around by not following your rules because it's fun or try things out. Commit to doing it right the first time, using a checklist of rules, and the sooner you use the checklist, the sooner you get paid. Compliments of John Novak, guys. This guy has been training people to trade for the last 25 years. Patience is required. I'd rather have fun with the money that I'm making being patient than have fun and not make money. Guys, there's that high probability trend trade checklist for you one more time in the room. I think this is the 15th time today that I've posted it in there. Remember we said when a pivot comes from beyond, large triggers don't follow. It might just be wanting to continue up, guys. You guys knew to stay out of the way. I do too, Paul. You guys don't realize this. I become a better trader every day we talk through this stuff. Every day I convince you guys or try to convince you guys to stick to your rules. I stick to my rules. New trader, have an amazing weekend. Thank you for being here. All right, guys, last 30 minutes. What do you want to talk about? What do you see on the 13-2? NG time, none of us were smarter and listened sooner. Did you, Ziba? I'm sorry, I missed it. There you go, Paul. If then, right? You're waiting for your rules to be met. Zeba and D did one too. All right, guys, I'm getting there. Here we go. Zeba, let's see what you got. Is the market coming from a good top or bottom? Yeah, I like that. Do you have odds favorable momentum? Not quite. It's hard to see your 13.2, but it doesn't look like it. But it looks like you've cleared the path. And you got in at support inside of the favorable large triggers. Awesome. Somehow not perfect. Strong trending market though, Zeba. So what you did is you got in. All the trigger lines cleared support. All the trigger lines cleared support. And when the market pulled back to that area of support, you took the trade. Zeba, you probably don't realize what an amazing entry this is. And can I talk about why it is? The smalls are inside, right? We're losing momentum. 2 divergences. Guys, this isn't your best look. Would everybody agree? Smalls inside, 2 divergences. That's not your best look. And this is patience. It pulls down. Your small triggers roll, Zeba. And then you take the pullback to the small triggers at support. And it makes this look better. Zeba, you have no idea how brilliant your entry is. When things aren't perfect and the smalls turn against you and it just doesn't line up, let those small triggers roll and wait for all your areas and indicators to agree again. If you took such a great trade, I love everything about this trade. Zeba, this is a 6 months in trade that you probably didn't realize how great it was. But this was the key right here. When your entry's not perfect, guys, you can wait for a little confirmation. You can wait for those smalls to go with the trend again. You can wait for all 3 triggers to be the same color and take a little stab back right to those small triggers right at an area. And this is a continuation style. And you notice how this price is the same as this price? It's just a little bit of patience. Nice job, Zeba. I love it. All right, D, let's see what you did. You're blushing. You've got a slow picture today, D, but we're getting there. There we go. Coming from a good top or bottom. You're confused by the 13.2 triggers. Does this mean no trade since no real determination of momentum? I'll tell you what. D, that sounds brilliant. D, are you with me in here still? Because I think after this look, I posted this picture. Cool. Let me give it to you again. D, when your triggers don't agree like that, you don't have momentum, right? It's confusing. The larger down, but the smaller up. But the smaller down, the larger down, but the smaller above the large. It's not odds favorable, right? D, it's totally cool. So D, where do you gauge momentum? The 5-1 or the 13-2? 13-2? All right. Then does it matter that the 5-1 is showing momentum? Are you willing to fight the crowd? Are you willing to fight all of these guys that set the tone because a few little yahoos said, let's trick them with the small chart? Indeed, that's such a great post and such a great lesson. Sometimes the 13-2 says you have to wait, even though the 5-1 starts to look pretty. But didn't the 5-1 look pretty right here for a short? It sure did. But the 13-2 said, no, not yet. D, hang on a minute, buddy. We're going to get there. And now everything's starting to come together. We just have one little hurdle to jump. That's a great question, D. It takes a little bit of patience to sit on your hands and wait for that absolute best of the best. But if you ask me, you're worth it. Your money's worth it. Your time is worth it. Joel, Cal, how many triggers got above that divergence high? Talk to me, guys. How many triggers got above? None. Do I have odds favorable momentum? No. Hey, D, check this out. There's an area of support inside of favorable large triggers. Can I get an amen? Rules keep us safe, guys. D, look, they pulled right back to a blue fib right inside of those triggers, right? The 5-1 said, D, go long. Trust me. Everything's going to be all right, D. Don't be scared. I got you. Your 13-2 said, D, come on, buddy. We've been through a lot. I don't want you to get hurt. Let's talk about rule number 2 for a second. Let's talk about rule number 1 for a second. Safia, you got run over on this one? What's confusing, D? Is rule number 1 met? Safia, is rule number 1 met? No. D, is rule number 2 met? Notice that I'm only pointing at the 13-2 chart. If rule number 1 isn't met, if rule number 2 isn't met, guys, does it matter what my 5-1 says? Some of you don't believe it yet, and that's okay. D, it's not even a guess. It's not even a guess, D. Exhibit A. That's okay, Safia. You're going to take them. As long as you go back and talk them out. The 13-2 says no momentum, and the 13-2 says no clear path. And the 5-1 tried to trick you into it. It said, hey guys, let's break our rules. Totally cool. It's green, right? Let's break our rules. And now it's trying to turn on you and say, you know what? Well, this one didn't work. You should go short from resistance. Come on, go short. Look at that magenta midband. That's got to be the trade, right? It has to be. Because my 5-1 says so. It's calling you. It's like the siren song, D. Guys, the sooner you get on board with your main advantages coming from the 13-2 before you ever look for an entry, the sooner you get on board with the concept that the 13-2 leads the way and the 5-1 is only an entry chart, right? The sooner you get on board with this right here, the fewer trades you're going to take and the more advantages you're going to have. Guess what, D? It sucks to wait. Doesn't it? Dag nabbit. That's okay. I will challenge any of you guys to a thick skull contest. It is. Waiting to trade is a learned skill. The easiest thing to do is pull a trigger, right? I think the market's going to go down. Well, shoot, I should probably sell it. No, wait. Those are up. Ah, I got to get out. Maybe I should buy the market. Oh, no, I shouldn't buy the market. Oh, let me close that out. If I let the 13-2 lead the way, if I really go through a checklist each and every time, guys, I've given myself 3 very distinct, 3 very proven advantages, right? Strong trending market, cleared the areas, haven't reached the area. There's your mid band. Look how everything went sideways. Do you see it? Fibonacci key area. Oh my gosh. Then everything agrees. And it pulls back with no divergence and great googly moogly. There we go. Has anyone ever touched a hot stove? Has anyone ever done it twice? I have. I've probably got 1,000 hot stove burns. You know why? Because humans take a while to learn lessons. Pain, losing this long trade is a great lesson. Embrace it. I worked at a restaurant, yeah, for 30 years. I've got plenty of burns. But guys, the idea is that it's okay to make mistakes and it's okay to not understand a concept, right? It's okay to get a little confused. It's okay to get a little anxious. What's the most important thing you can do if you take a trade and it doesn't work out? Is it to sit on it, to hide it? Don't tell Mark. He's going to think I'm silly and brand new. Or if you post it in the room, what's the most important thing you can do? Annotate a chart. Odds favorable momentum. Not met. Clear path. Not met. And the guys, just do this. Who cares? I don't have rules to take a trade. That's the hardest thing, isn't it? More than 2 times, Eva? At least. I do the cooking in the house, guys. I've burnt myself lots. I still do it. You ever go to a Mexican restaurant and they say, be careful, this plate is hot? What's the first thing you do? You grab that plate. Why? Because I've got to know for myself. Eventually, you grab enough hot plates, you stop doing it. When I worked at the Tex-Mex restaurant, guys, plates came out of the oven at 420 degrees. We had to warn everybody. It's trying, isn't it? Are we watching this fight, guys, between buyers and sellers? We're watching them struggle. The buyers are trying, but the sellers are fighting. If there's going to be a long trade, it's going to be above this pink line with odds favorable momentum. Am I right? If I'm a rules-based trader, because they are, D. Because that's what they decided that they wanted to do. I don't control that. Guys, the sooner you realize that you don't control the market, the easier life becomes. The faster you accept that the market's going to do whatever the hell it wants to do, no matter what your opinion is, you're going to do better. And even more so, guys, when you stop feeling like you're entitled to a win every time that you take a trade, you're going to have more wins. We're going to talk about this one. This will be how we close out this weekend. Safia, I love this. Rule 1 not met. Don't trade. Oh my gosh, Safia, Rule 2 not met. Rule 3 not met. Because, Safia, it's Friday and it's 12 o'clock somewhere, right? KR, take care. Safia, you got bored waiting and you took a trade. What a great lesson, though, right? A little bit of sting and you're like, all right, hold on. Hold on. I broke some rules and it didn't work out. How do we not make that trade? You did the same thing? D, you not make that trade when you believe in your rules. That's all you have to do is believe in your rules, right? If you believe that odds favorable momentum gives you an advantage, if you believe that clear paths give you an advantage, well then it's easy not to take this trade. But guys, you got to do the work, right? You got to do the work. Isn't that something else, Claire, Zeba? So here's your homework, guys. I want you to go to your spreadsheet, the one that you have on your computer in Nexgen, and I want you to go through these pictures of high probability trend trades, one after the other this weekend. I want you to dedicate 30 minutes. And if it's not annotated, annotate it in your brain. Have your checklist. And I want you to do me a favor, guys. I want you to come back Monday, and if any of these don't appear to follow the rules, I want to see a picture with the rules on it so that I can amend my spreadsheet, okay? Can you do that? Is $1 million a year job worth a little bit of effort? Guys, you have every resource that you could ever need to be successful. The only thing I need you to do is use them, right? Practice them until you trust them. And then make some mistakes and post your mistakes in the room, and we'll talk about them, and we'll continue that path, guys. We're in a cha-cha right now. Step forward, step back. Step forward, step back. Move to the rhythm. The music's going to play as long as we need it to play, guys. There's no hurries. We're there. We still have 10 minutes. Anybody want to talk about something? What has to happen for longs? If then, guys, if we break through the pink line, if the triggers get above it, if I have odds favorable momentum, if I have a clear path, then I'll look for an area of support inside of favorable large triggers. If it doesn't happen, I'll continue to wait. Guys, crude oil is in an unbelievably strong trend. When the market's doing this, I won't even consider a short trade until everything rolls on my 21. I never try to be first on that one. Doesn't do me any good. Can I hold my virtual money trading at Apex as long as I need, or is there a time limit? So what happens, Racha, in Apex is you can get the account, you can do it. You have to trade a minimum of 7 days. There is no maximum. But every 30 days, it will charge you that monthly fee. Cool. You're very welcome. Just hit close. Zeba, hit close, not sell or buy. If you just want to get out manually, if I'm in a position, and I'm not saying that's the right position to be in, and I'm saying to myself, you know what, I'm done, I want out, just hit close. Exactly, Gary. 30-day cycles. Well, of course it will, because you closed it out. What are you trying to do? Are you trying to reverse your position? I'm not. Close will exit everything. It'll flatten you. You're no longer in a trade. Smalls are breaking through. Large are not. Trigger lines are up. What do you think, guys? Odds favorable? 50-50? Area of support inside of favorable large triggers? Exactly, Sam, 50-50. So what do your rules say about a 50-50? Do they say, if there's divergence, I won't take it because I'm a new user and I'm going to err on the side of caution? Or do they say, I'm willing to take a shot because I have a clear path, because I have momentum? And ES is in grind mode, right? And then John showed a larger time frame chart. I'm assuming that's a 21. Showing you why the 13.2 is not going down today, because that 21.3 is leading the way with an awful lot of momentum. But you have to be in the moment, right? You have to be in that moment. You have to be in that rules-based moment. Racha, what do your rules say? Is your rule for entry an area inside of favorable large triggers? Or is your rule for entry a gold line? Are you waiting for the reversal bar? Cool. Not yet. There's still not a reversal bar, right? But guys, if this bar turned into a reversal bar, is there any question? Nope, D, not yet. This is just a fluctuating bar. Until this bar is red and printed, D, there is no pullback. There is no reversal bar, right? Now it's just kind of bouncing around. That's it. Did it? Did it print, though? It has to print, D. This bar won't be a reversal bar until price reaches 40.23 and a quarter. That's the only thing that's going to make this bar a reversal bar. Until then, it's nothing more than fluctuations. It's trying to figure out where it wants to go. Does that make sense? Absolutely not. D, where do your entries come from? Here's my large triggers. Do you see it? Here's my area inside of favorable large triggers. So if it prints, how could I miss my entry? It hasn't gotten to an area yet. Do you see it? Does that make sense, D? It's great questions. This is a great conversation. Isn't the 5-1 my entry chart? So that's what I'm looking for, right? Is an entry on my 5-1. I've already got everything I need from the 13.2, don't I? I've already got odds favorable momentum. I've already got an area with the potential to break. The only thing I need is a reversal bar on my 5-1. And if I get said reversal bar, I need it to come back to my area inside of favorable large triggers so I can get into this trade. Guys, that's a rules-based trade. And I may have to adjust. There's no guarantee of a pullback. Is there? Odds favorable. Clear, right? Clear path. No termination condition. It's trying, D. Oh, it's trying. Where are the top of my triggers? Where are the bottom of my triggers? Where's that one area inside of those favorable large triggers? You see how I'm doing it? Even without the reversal bar, I can identify my window of opportunity. You'll figure that out. D, you'll lose enough. You'll develop some patience, right? You'll get run over enough trying to get in up here that you'll develop some patience. You're going 23 and a quarter. Paul says he's going to go at least 2 ticks above that area of support because he knows that it's coming up, right? Paul's not going to trip over pennies to save a couple dollars. Nice job. Is everybody comfortable? Can you do this right now? Watch this. Take a picture, pre-trade. Write your rules on it. Are they met? Guys, this is the most important picture you can take. 1 and 2 are met. Area inside of favorable. Look at this. I'm not in the trade yet, but didn't I confirm that my rules are in fact met? Didn't I give myself the assurance that I have the advantage, that I have the advantage of momentum, that I have the advantage of a clear path, that I have the advantage of an area where the market is likely to continue? Ziba, then you're right where you need to be. Good job. But do you see this, guys? This is what we call a pre-trade picture. Get in the habit of taking this one. Because now I don't have a care in the world with that trade, but I just reached resistance and absolutely no trigger lines went through. Ugh, I'm in a waiting pattern. But if I weren't, isn't this still the area where the market's likely to continue? Let's pretend, just for grins. Watch this. We'll do this. Guys, I'm not going to give us the burden of termination conditions for the sake of an entry lesson. Odds favorable, no terminations. Do you see it? I got rid of the termination conditions. D, we're waiting for a reversal bar. If a reversal bar prints, this is my area of support inside of favorable large triggers. Even without the reversal bar, it becomes easy to pinpoint this area where the market is likely to continue. And guys, you're going to get to the point to where you go from wondering where it is to identifying it long before the market ever gets there. I need price to get to 40.27. If it does, I'll get a reversal bar. If I get a reversal bar, that's when a new user will right-click. Watch. If I get a reversal bar, I may not. I don't know. It might just keep running up with all that momentum, right? There it is. There's my limit order, 2 ticks above support inside of favorable large triggers. Do you see how quick that happens? Now it's out of my hands, isn't it? Gary, termination, 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 not taking a trade. I like it. Should I wait for it to pass through a blue fib? All right, D. What blue fib are you talking about? Show me a picture. I'll stay late in class because I think this is probably a good lesson. On which chart? On the 13.2? On the 5.1? D, what does Rule 3 say? Rule 3 says, yeah, it's a termination. No, it doesn't say clear entry. Let's go to the rules. Rule number 3 says that we're going to use a limit order at an area inside of the triggers, right, D? We're going to use a limit order at an area of support inside of the trigger line. So D, this is how I determine. From the top of my triggers to the bottom of my triggers. Do you see it? This white box represents the areas inside. Where's this blue Fibonacci support? Is it inside of those triggers? No. So is that the area where it's most likely to continue? Not so much. Here's a picture too. There's the area of resistance inside of favorable large triggers, just like we're seeing now. That's all the way outside. That's not where it's most likely to continue. So D, it's a matter of believing the rules, and then once you believe the rules, practicing them until you can execute them, until you can follow the rules every time you enter a trade. And you guys posting questions, you guys posting pictures are how we determine where you're at with that understanding, right, D? Because you were thinking blue fib, and we just had an awesome conversation about how our areas need to be inside of favorable large triggers. And there's a little more clarity as you go into the weekend. Guys, you have given us an absolutely amazing week. And I appreciate all the feedback. I appreciate the participation. If you are on demo and you need help, if there's something that you need help with, I want you to use your voice. I want you to ask. If you are an experience with us, you've been with us forever, how long? I don't care. And you have a question, I want you to ask. Guys, I absolutely love the learning process. I really do. Don't be shy. I got you each and every day. I'll see you guys Monday. I want you to go through. Awesome. Christina, just talk to whoever you're working with. Let's make you a client. You're doing amazing. I'd hate to see you throw that away. Guys, go through the spreadsheet and look at all those pictures of high probability trend trades. Burn that image in your mind. D, go through that spreadsheet this weekend. And look at all those entries over and over and over, right? Over and over. And I'll see if I can get John to upload the rest of them in there so you guys have 100 examples. I'm telling you guys, once you burn it in your mind, it's going to start to stick. It really is. He doesn't even need to post it in Discord. If he can upload it, that's great. Here, watch this. D, I'm going to give you my spreadsheet right now. There it is, guys. That is my personal spreadsheet for each and every one of you. All you need to do is click on it and drag it over to your desktop. That's all you got to do. Look at my pictures. Most of them are your pictures. It doesn't open for you. So, D, if you click on the link in the room, it's not going to open for you. If you, here, see the download button? Download it. It'll come up here. Click on that link. And then what you'll probably need to do, D, is enable editing. Once you enable editing, you'll be able to file, save as, save it somewhere on your PC, and then you'll be able to get that access to it. That should fix it. 53 lines, I believe. 53 filled out lines. Cool. Awesome, guys. I hope everybody has an amazing weekend. Gary, unless you have a question. Potential for a 50-50 trade if the smalls go above, right? Potential. Good day, Gary. Gary's saying, if then. You're welcome, D. If then, if my rules are met, triple dog dare you to keep me out of this trade. All right, guys, I'm going to shut it down. Have an amazing weekend. Christina, you're so welcome. It's been absolutely amazing having you in class. I hope that you continue to show up. I don't know, NG, you'd have to do some research, right? The 13 range is slower than the 8 range. I don't know. I'm not sure. What seems volatile to you may not be volatile to me. NG, everything that I do is based on 2 charts. Everything I do is based on my rules met on 2 charts, and my range charts are nothing more than a confirmation tool, right? All right. So NG, how long have you been with us? I want you to remember, that's the number of years of experience John Novak has. Don't decide what you need to do based on somebody else's experience. He's old as dirt, Paul. And guys, remember that. Remember that you're on the path, right? You're building a foundation right now. You're not going to wake up one day and suddenly forget everything that you've learned. You're just going to compound from it over and over. So don't be in a rush. It's like being 12 wanting to be 18, right? Then you get to 18 and you can't wait to be 21. Then you get to 21, you can't wait to be 25 because then you're like, ooh, my insurance goes down. Don't be in a hurry. Enjoy where you're at. Embrace where you're at. Focus on the foundation. And you're going to be there, guys. Tomorrow's going to come whether or not you want it to. Whether or not I'm here, tomorrow's going to come. So focus on what's important in the beginning. and then keep moving at your pace from where you're at. Guys, I will see you Monday morning. Take care. Enjoyed this week. It was a good week. I appreciate all the participation, guys. I am out of here.